Good morning. I hope everyone's having a good day. I've been watching a video from Benjamin Hardy. He wrote a book recently called 10x is easier than 2x. Really interesting. Anyway, I guess we better go to work. Today, we're going to talk about the creation of Kai-Zen, unveiling its fundamental principles. And you don't have to watch me the whole time. I'll go ahead and go to my PowerPoints. All right, as I said, the creation of Kai-Zen, unveiling its fundamental principles. This is a review for those who don't know. OakTree Premium Finance, we specialize in Kai-Zen, an innovative investment strategy that amplifies your funds by up to threefold for building a cash accumulating life insurance policy through strategic leverage. You'll learn a little bit about that if you haven't looked into it before. I put that little note on the left bottom, the QR code. I put that to remind myself to tell you about the QR code. The QR code is on a lot of these slides, and you can go to that QR code and take a picture of it, take it down, and you're going to have a video about Kai-Zen. You're going to have quite a running page to explain a lot of it. And it's a good start if what you see today looks intriguing. And there will be a place to put in your name, and we'll down the road talk. Okay, and another review. Here's the services, products, and uses we offer. I rearranged these from the last time we had a webinar. I put the personalized ones all on top, all in blue. Retirement income, transferring wealth, life insurance with living benefits, infinite banking, fixed income alternative. You're noticing that it says Kai-Zen underneath all those. The employee benefits, that's a business point of view on the second row. And kind of a grab all. These are also business, key person, buy, sell, succession planning, funding liabilities or split dollar, all where we use Kai-Zen. Now, we also offer traditional premium finance, and you'll see a quick definition in a minute. And then we're adding, it's not ready yet, a retirement income calculator, gap calculator. I think you'll find that fun. Another review area is the toll booth of Kai-Zen. I wrote an article, we probably won't publish it until February, but called the toll road of Kai-Zen. I think it's going to be a fun article. And so these are the toll booths. These are the things that you need to get past to have Kai-Zen. Financial capacity, possess the financial resources to make 5 minimum annual payments ranging from $20,000 to $40,000 based on various requirements. If you pass that one, growth period, anticipated commitment to a 15-year investment horizon before initiating withdrawals. If you pass that one, require 100,000 minimum income with potential net worth requirements. Next, underwriting classification, life insurance underwriting classification, standard or higher. And last, age range between 18 and 65. Quite a toll booth, isn't it? Another review. Here's the 5 key aspects of Kai-Zen that I've discovered. And we won't explain it all in detail right now, but leverage maximum funding up to 3-to-1 without collateral, personal guarantees, loan documentation, interest payments, or credit checks. You'll hear about that in our webinar today. This substantially reduces capital risk. 2, performance, market-like returns or market better than market returns with no downside, eliminates market risk, taxes, tax-deferred growth and tax-free withdrawals, eliminates tax risk, 5 annual payments, reduces payment fatigue, and last, death benefits and living benefits, terminal, chronic, critical illness, and critical injury benefits, eliminates financial vulnerability risk. Quite a few benefits. So let's get into our topic. The creation of Kai-Zen, unveiling its fundamental principles. I've been involved with the creator of Kai-Zen, NIW companies, for 3 years. I've attended, they have training meetings every week, almost every week, and I've attended almost all of them, over 100 training. I've been to Plano, Texas, and training with the firm. I believe they got a great product here. But anyway, NIW started doing business in 2000, doing premium finance. Premium finance, which we also do, is when you borrow money to pay for insurance premiums used by the affluent, usually for estate tax planning, providing liquidity for other financial needs or optimizing cash flow. NIW, excuse me, are widely recognized as the premier experts in technical solutions and support, leading the way to specialized services across the United States. They created Kai-Zen in 2013. Do you know what Kai-Zen means? It's a Japanese word meaning continuous improvement. And that's their mantra as a company, continuous improvement. There's one of the founders, Dane Womwell. In designing Kai-Zen, he said, here's some of our concerns. He's concerned as an employee, the things that I used to worry about. Concerns of a CEO, the things that kept me up at night. Concerns of a father, the things that worry about at home. And these concerns help them to craft the solution that Kai-Zen has become. Employee professional concerns. These are the biggest concerns most of us have in life. Not having enough money to maintain your current lifestyle throughout retirement. Medical emergencies could wipe out my savings. Taxes on the rise. Protecting my family in case of anything happens to me. These are the top 4 concerns we have financially. And it's difficult to save. How many people actually save enough for retirement? Americans on average have saved only 78% of the amount they need in retirement. I don't know if that's, Fidelity says that's the number, but I'm not sure it's that high. 52% of households may not be able to pay for essential expenses in retirement. Now that makes more sense. That's the way it is. People do have to oftentimes spend less in retirement. They quit the vacations. Tomorrow, Barbara and I are going to Scotland and France. We'll talk to you in a couple of weeks. The biggest impact you can make on your retirement income. Investment return makes up only 26% of the outcome. 74% of your financial success is due to the amount of capital at work, how much money you put aside. You know, most advisor, that was me for 35 years. I was striving to help my clients get a better return. That's what I could help them with. I really wasn't helping them have more money, and because, well, how do you help people have more money? But that is the most important thing that's going to make more difference on your retirement and your income, is getting more money working for yourself. So we're going to talk about Kaizen. I'm going to do, oops, I didn't mean to go ahead. I'm going to go to a video. Excuse me as I find my cursor on my website. Have you ever had that problem? Oops, we're back there. Sorry. I had this all set up. You know how that goes. Well, I've got to actually go. I've actually bummed out of my site. Let me get back to where I want to go. I'm going to go to my website. And I'll be there shortly. And this is the section of my website where I have videos. And these are the 6 I have on the front page. But I'm going to go to the second page and see this one called Kaizen for Executives. This is the one we're going to watch. Sorry, that took me a second.
When it comes to retirement, executives often think investing in stocks and other investments will provide enough income to maintain their current lifestyle for the average 22-year retirement. In most cases, this ends up not providing the means to maintain their lifestyle throughout retirement. And when they come to this realization, it's too late to do anything about it. Most highly compensated people don't start saving until their 40s, missing out on years of compounding interest. This result is a significant loss in retirement funds, and in their 40s, most are saving about 9% of their income. So how much should you be saving if you want to maintain your current lifestyle in retirement? 33% of your income. There's got to be another way to meet retirement goals without having to use a third of your income during your career. Introducing Kai-Zen. Kai-Zen is a proactive strategy that gives you access to extra money up front, providing you the potential to earn more for your retirement, protecting your future income without putting a drain on your current way of living. This strategy helps you maintain your current lifestyle in the event of chronic illness, premature death, or inability to sufficiently save for retirement. Traditional retirement plans are typically insufficient for high-income earners. Kai-Zen is different because it makes the use of leverage without the need for participant loans, interest payments, or personal guarantees. One of the greatest advantages of leverage is it provides an opportunity to significantly enhance your ability to save for retirement. Experts agree, when used correctly, leverage is a very powerful retirement tool. Even Forbes says you can leverage your way to a richer retirement. Your contributions are matched by the lender for the first 5 years. Then, the lender uses that as a security for the additional funds for the next 5 years. The contributions are used to fund a cash accumulation life insurance policy. A minimum amount is used to purchase the death benefits and living benefits, while the majority of the cash is used to maximize your potential tax advantage growth. What could be better? Kai-Zen also has unique cash accumulation features within the policy. When a market index like the S&P has growth, it is calculated and credited to you. Once gains are credited, they cannot decline due to market losses. This helps keep your money safe. Would you rather have this in retirement or the potential for 60 to 100% more retirement income with Kai-Zen? Secure your lifestyle with Kai-Zen. More money, more protection, and more confidence.
All right. I hope you enjoyed the video. It's a good introduction of what Kaizen is. There's other videos, as you saw on my website, about Kaizen, different approaches. So we worry about risk. And I just showed you that there's borrowing involved in Kaizen. Isn't borrowing risky? If the plan goes wrong, will I go bankrupt if I can't pay back the loan? Well, this is a summary a little bit, but there's no credit checks in Kaizen. There's no loan documents. There's no personal guarantees. There's no out-of-pocket interest payments. There's no loan, at least from your point of view. The policy uses your payments as the sole security needed to leverage the plan. There's no liability outside of the plan payments already made. That's amazing. Less hassle, no loan underwriting or financial background checks, no interest payments. Making the loan secure, the bank loan is fully secured even in adverse conditions. The plan has been stressed. The reason why, because the money is actually in a fixed account. And how you get market returns plus is probably another topic we'll have to cover a little later, but the plan has been stress tested to the extreme, tested in 18% high interest rate markets, tested throughout the Great Depression scenarios. The policy is asset protected by state statute. This is designed to be your safer retirement vehicle. Here's a little bit of information about those stress tests. In the 1980s, interest rates were outrageously high. I remember them. Interest rates, here's the caption, interest rates reached their highest levels of modern day history in the early 1980s before Volcker's Fed hiked rates to fight inflation. Stress test index universal life policy design. NIW stressed this up to 18% and it still performed. And then they went to the Great Depression scenario and stress test it here. Here you have, I think it was 9 negative years out of 15, 6 in the first 10 of the 30s. The stock market crashed at 29, unleashed the Great Depression, the worst economic financial market shock in US history. And Kaizen stress test with performing, and even this time. Another concern, what about high interest rates? Interest rates been going up like the 1980s. Well, the 1980s, as we just showed, came out okay. I've got 2 videos on my website that addresses this a little bit. Kaizen was built for high interest rates, a good short video like the one we just saw. Another one from National Life, how interest crediting actually works. So you can see that why there's zero floor, why you can't lose money. We'll have to do a whole webinar about that. So Kaizen, what does it give me? Kaizen gives you potential cash growth, which can be used to supplement retirement earning. I put the word potentials there because that's what the regulators require. This is a pretty conservative investment that's going to historically has done extremely well since the 1930s. This has stress tested well. Meaningful wealth transfer opportunities for parents and grandparents. That was last month's webinar. Improved employee benefits for employers, aiding in employee retention and recruitment. Those 3 things are the top 3 reasons why people buy Kaizen. 4, death benefit protection with living benefits, long-term care, disability. If you're concerned, well, most people should be concerned about those things. It happens. 5 tax-deferred withdrawals when using policy loans to meet diverse financial needs. A low volatility alternative, traditional fixed income investments. Have you seen this list before? You kind of have. There it is again. There's the retirement. There's transferring wealth. There's life insurance benefits. There's infinite banking, pulling out money later. There's the alternative, fixed income alternative. There's the employee benefits. Kai-Zen answers a lot of things. And this is our laundry list we showed you up front. Leverage, performance, no downside, tax-free, 5 annual payments, death benefits. I love Kai-Zen. Of course, I'm the salesman, but it is great. And what do you get as soon as you buy it? This is a long-term plan. That 15 years we talked about, like any supplemental for retirement income, but immediately you have life insurance, death benefits, and you have the living benefits. So you have a disability plan, you've got a long-term care plan immediately. And you have this additional funding, potential cash growth for retirement savings. And you have tax-deferred withdrawals using policy loans without paying taxes. This becomes tax-free. So here's a little bit of a visual on how it works. You have 5 annual payments. That's the gold piggies. At the same time you're making those 5 annual payments, the bank is making about the same amount, 5 annual payments. After your 5 payments have ended, they're continuing to make their additional 5 payments and paying your payments. And we oftentimes call up to 3-to-1 leverage, and that's kind of a visual. Through 10 years, you're going to be putting in approximately 3 more times more than you are. You can make the payments once a year, 5 total payments, and one of our vendors, I'm going to change this slide for next month. One of our vendors sometime this month is coming out with monthly payments. The lender uses that as a down payment to secure the loan. The life insurance policy is optimized to accumulate cash value. Some other information about it. While the loan is in place, your policy secures the loan in its entirety. That's the security. You can't be asked to pay more money back. When the loan is repaid, the policy funds becomes fully available. The loan can be repaid at any time, but to have optimal value, it should be left 15 years. We have stress tested this too, that 99% of the time, we can do this in the 15th year. If the market does really, really, really well, maybe you'd have the loan paid back in the 11th year, 12th year. But 99% we can plan on that 15. This is a long-term plan. Life insurance is not suitable for short-term cash accumulation. That has to be the #1 disadvantage if you can't handle the 15 years. This here is an actual statement of Dane Wimwell. We saw his picture a little earlier. He's the CEO and co-founder. This is a recent statement showing this is an early purchase policy. So let's just go through it. So in 2013, he bought the policy. The return that year was 13%. His interest rate was 2.75. We see his payment, $39,600. We could talk about trust fees, but we won't spend a lot of time on that. We've got another video that I'm putting on right now on my website about trust fees. But so there's a total client contribution with trust fees. There's the bank amount paid. You can see them, a little 43,000 in the first 4 years, 31 for then. Then we have Dane quit paying, and the bank's still paying $80,000 a year. So you can see the amount. If you go way down to the bottom, paid into the policy is $806,881, and he put in $198,500. And we can also look at the performance. We have that column, the third from the left. We can see everything. Whenever we see that 0 in 2015, that means the market was negative, but you can't have a negative. And notice in 2021, there's another 0, and you can't have that was a negative year too, but you can't have a negative number. We have the worst performance you get any year is 0. And 2022, when they put that number in the statement, is a -2. And so it'll be a 0 year there too. Out of 10 years, you could probably expect to have about 3 zeros. And if you're in the market by yourself, you'd have negative numbers that you have to recover from. Way down at the bottom on the left, you can see he's averaged 7.45, and his interest rate has averaged 3.37. Would you like to borrow $10 million, make 7.45 on it, and pay 3.37 and make that spread between? That's called, in between, that is called the spread. Wouldn't that be wonderful? Well, you have to have a collateral to do that. That's premium finance. But we don't have any collateral here, but you make the spread. They've also back tested what has been the worst spread in something like this from the 1930s. And the worst spread for any 15-year period of time was 2%. Now, in a negative year, you have a 0 year and you pay 2.75, you lost 2.75. But on average of 15 years, there's never been less than 2. So let's go over some frequently asked questions. This sounds too good to be true. Life insurance cash values grow tax deferred if the policy stays in place. The cash value of the policy is primarily protected, so it makes it easy for the lenders to secure it. Your contributions secure the bank loan through extreme harsh economic conditions, so the plan is very resilient. In fact, the loan is safer for lenders than a mortgage. And state statute, Nevada, protects the cash value and death benefits of the policy from creditors. All the policies are issued from Nevada because of this. Nevada has better creditor protection laws. Is it too good to be true, or just new to you? What happens if the market don't perform? Well, you get a 0. It's not the end of the world. You will have some 0 years, not negative. What, 2008, negative 37%. What happens if I can't complete my payments? Well, if you can't, then the bank will ask for their money back. It'll be cashed out, and you'll get less back. It won't be the end of the world for sure, but it certainly isn't what we want to ever happen. But my advisor says this doesn't look good. You know, just yesterday, I had an email from an insurance agent. Said, Jim, did you read this article about premium finance and how terrible it is? And my vendors don't like this Kai-Zen. You know, I understand. I was an advisor for 35 years. I didn't think insurance could ever be a good investment. And I had a study this out and look it over. But most advisors are not in a position to really study it out or wanting to. They just don't believe it's going to happen, but it does. Talk to the people that really understand it. So, Kai-Zen, their tagline is more money, more protection, more confidence. But let me try to give you the key takeaways from this webinar today. Kai-Zen, solving the problem of not being able to save enough money by adding additional capital to the plan. Focus on the problem, not the noise. Remember that 74% and 26%? You got to get more money in the plan. We help solve that. Kai-Zen, creating a strategy that reduces risk, allowing you to never be underwritten for the loan. Ooh. Kai-Zen, this plan is designed with the intention of being a safety net for you and your loved ones. All right, this is my hint that I'd like to go to the ILIA website. ILIA website was created by NIW, Interactive Learning Information Assistant. This site has a lot of information on it, and it's the place where we can invite you to go to. You have to have a login and a password. You'll create a login and password so you can go and visit it anytime you want after you have those. On this site, we're in a position to estimate benefits. And I lost that last thing. I'm going to, I hope I can pull this off. Bear with me while I get to this site. You can see I was downloading some PowerPoints this morning. Okay, we are on this ILIA site now. And over here on the left, we have key Kai-Zen details. If I click that Kai-Zen details, we have an inventory over here on the left of everything this site offers. It has this introductory video. Oh, it's the exact same one you just watched. You have the estimate my benefits that I'm going to come back to. You have financial solutions, explaining the details of Kai-Zen, how it works. Another one, another video, how it works, information about the product, leverage, minimizing risk, plan details, testimonials. You can see their news and social videos. You've got a lot of information. Frequently asked questions here, just about anything you want. They even have way at the bottom after you've logged in and you have a password, an enrollment button that we can help you get involved. But let's go to the estimate my benefits. So here at the top, I've got quick results estimator and custom designer. Well, I'm going to start with the quick results estimator. It says age and sex and dollar amount put in. Let's change this age. Let's see, a good middle of the road. I'm going to say 45. And, oh, we could leave it male. Then down here, we're going to go to how much we're going to put in. It says, it started with 40, here's 30. Let's stay with that. Let's go low. So 25,000 is going to be the annual payment for 5 years. We're going to click this button. Oh, we're going to go here, calculate again. And the quick estimator is now working. And you can see there's the 5 piggies. There's the piggies from the lender. And here's the money amount. Here's on the right at the bottom, your total contribution is 125,000. And the banker is going to be putting in 291,990. So the contribution is 416,000. And before I go to the benefits and distribution, way down here at the bottom where you can't hardly read it, it says illustration growth rate 6.71. You know, we've averaged about the last 10 years about 8.5. But you would not want me to estimate this at the average or 10% or even higher than that. You want me to be conservative. So we do that. We're doing 6.71 as the growth rate. And we're also using the interest rate as being approximately 1% less, or 5.71. And remember, we haven't averaged since 1930 less than, this strategy has never averaged less than 2%, but we're going to illustrate this at 1%. So now let's go to click this button, next benefit distribution. Did I mess up? I mustn't. Let me fix this up. Let's go 45 again. 25, calculate again. I'm sorry, I need to click this button, benefits and distribution. So this policy is going to start out with a death benefit of $616,965. And the internal rate return, even with that lower interest rate and the interest we're paying, the internal rate is going to be 8.55 because of the borrowing. And beginning at age 65, this was a 45-year-old, so in just 20 years, we can now, this policy will give him $37,000 per year tax-free. And that we've put that out through 90. He's going to pull out $962,000 tax-free. And remember how much he put in? $125,000. And we're still going to have a death benefit of $555,952. This is where people start saying this is too good to be true. And next, we're going to do a click here. We're going to do a comparison. They have this bar chart thing, but I'm going to go to the numbers. So there's the 37,000. Here is the total he's going to pull out through age 90, 962,000. Here, this column is if we did this policy without the Kai-Zen leverage. If we did it, no borrowing. Instead of 37,000, we get 26, and total would give 676. And because we have no borrowed money making money for us, our internal rate of return is 6.72. Or another option is just invest this money on your own. And average that 6.71. We're being fair. You could pull out 20,000 a year and have a pull 531 total, and internal rate of 5.28 because you're paying taxes as you go. Or you could do it at an IRA or 401k. That's that tax deferred column, and you'd raise your return to 25,000 or 676. So for a 45-year-old, Kai-Zen with the same performance numbers will outperform all these. Now, if we scroll back to the top, we can go to the custom design. I probably want to be wrapping this webinar up. I don't want to take all your day, but I do want to, let's do one more. So we're going to put there's more information asked for. We're going to customer name. I'm going to put the name of A and the last name of A again. Let's do that. Then we select a birth date. And 0101 2000. That'd be a 23-year-old. Oh, should we do it that young? Oh, well, that was an easy one. Okay, we'll do it. Select gender, we'll do female this time. Health, we got excellent or average health. We're gonna go excellent. Does the client use tobacco or marijuana? No. We're gonna click next. Next, do we want this as just as a death benefit, or we want that income strategy? I'm gonna go stay with the income strategy. And then we're gonna decide out how much we want per year. Notice in the fine gray area, it says the minimum for this 25-year-old? Was 23-year-old, was 19,350. Well, for a 23-year-old, this is probably grandpa or the parent saying, you know, I've got it set for myself. Let me give some to Junior. Let's do the average in the nation on Kai-Zen policies are 70,000. But let's say they decide, oh, we could do 40,000. Then we're going to click next again. Then we decide we have more flexibility and decide when do we want income, 65 to 90 like we saw before. Ooh, why don't we go, Social Security starts paying at 62. Let's say they retire at 62. Let's give them income through 100. Ready? View results. Now, on this more complex case, it's going to take about a minute. We're stress testing and crunching the numbers, and actually we're involving the insurance company, and they're actually creating a legal illustration for the person who's doing this that they're going to stand by, and you're going to see these illustrations in a second. But we have to kind of be patient here. Let me look at questions have been submitted and see if there's any others. There's one question similar to this. I have a 30-year-old son. Can I buy one for him? Well, yes. We're kind of doing that one right now. I'm 55. Am I too old? No. But remember, we have that 15-year kind of time. So 55 plus 15 years is 70. You know, I wonder if the new retirement age in our country is going to be 70. If you're 55 and you're targeting to retire at 70, you could use this for income. But if you're using this as just a fixed income alternative, 55-year-old, this will work. If you're using this as a infinite banking strategy, it's going to work. If you're using it for life insurance or long-term care and disability, it's going to work, and maybe for retirement income. Notice way at the top, see that little circly thing, view illustrations? Well, all the stuff is right down here. Let's look at this first. So here's our contributions, 200,000. Lender's going to put in 510. Now we're going to click benefits and distribution. We're going to get initial, this is a 23-year-old, the life insurance is $2,226,295. And this 23-year-old is at age 62. We're going to be able to pull out $297,000 per year tax-free. Ooh, is this too good to be true? And by the age of 100, because we went longer and we started earlier, we're going to pull out 11,583,000. How much they put in? 200,000. And we're still going to have death benefit of 3,595,000. You gave something that's they've got long-term care, they got disability coverage, protection for their family, and retirement. Next, let's compare it. And here's the numbers: 297 without the leverage, 168 with just investing 85,000. We're 3 times that, more than 3 times. And in an IRA 401k, 113. There is no better and safer retirement strategy. And way at the top, view this illustration. I've got 2 things I can show you. The client proposal. Remember the name? AA. And here we have everything we just went over, total explanation. Sorry. And then if I back up, we've got the carrier illustration. And I used Allianz today. But here, this is multiple pages, just a long presentation with all the explanation you could possibly need or want. Talks about the indexes they use, a lot of information. This is here's the indexes. Yeah, it's very, very helpful. Looking over that. Anyway, the other questions. Oh, I really have gone long enough. Can I buy one for just one employee? And can I have them pay half? Yes. You can selectively choose it for your employee, and you can sit down and talk to them about a retirement plan and have them pay half. Well, yeah, I hope that's been helpful. Let me go back to my one screen. Whoops. I'll have to do better in the next time. Yeah, I don't even want that one screen. There's where I should have ended. So there's my telephone number. Oops. I put a 0 where I should have put a bracket in my phone. Sorry. And there's my cell phone. There's my email address. There's my website. And there's that QR code. Well, I hope you've enjoyed the webinar. I'm planning to do this every month and hopefully have some creative and unusual topics. But hope you enjoy your day. Thanks for attending.